Welcome to the MUFG Global Markets Podcast. I'm John Cook, and I'm joined today by Takahiro Sekido, Chief Japan Strategist for MUFG. It's Monday, November 28th, 2022. Welcome back to the podcast, Sekido-san.
Good to be back.
Always good to have you on. So let's get right into it. The selling of US Treasuries during the month of September was remarkable. To be clear, by Japanese investors, but there's more there. So tell our listeners, or take our listeners through what the USTIC data shows.
U.S. Department of the Treasury International Capital (USTIC) data for September, released on November 16th, shows that Japanese investors net sold U.S. Treasuries by $35 billion and U.S. stocks by $3 billion. At the same time, they net bought U.S. government agency bonds by $60 million and U.S. corporate bonds by $1 billion. Japanese investors unloaded a net $29 billion of treasuries in June, July, and September as they approached the end of the first half of fiscal year 22. Japanese investors were huge sellers of U.S. Treasuries in September. They have continued to sell foreign bonds in October and November, and were net sellers of 526 billion yen of medium to long-term foreign bonds in the week of November 13th to 19th, according to the Japanese Ministry of Finance data. Over the near term, we will be watching to see if Japanese investors rebuild stocks and spread products positions, showing their appetite for risk has returned, or if alternatively they instead rebuild G10 bond positions, including with U.S. Treasuries. We expect Japanese investors to continue reshuffling their investment assets, especially the spread products and alternatives, to cover dollar-yen basis costs.
Yeah, I mean, that selling is really remarkable. To put it in context for our listeners, they sold 10x what they purchased the month before. And I think, at least I'm looking at your piece here, Sekido-san, as we record, but I think the selling was by far the largest of any month since 2015. And there was maybe 1 month that came close to it. I guess it was either, I can't tell if it was earlier this year or in 2000. Yeah, it looks like it was maybe earlier this year. But yeah, just staggering the absolute magnitude of the amount of selling. Okay, so that's September. What about October? We obviously don't have the TIC data yet because that comes out with a pretty significant lag, but we do have more timely data from the Japanese Ministry of Finance, as example. What does this data suggest Japanese investors were up to during the month of October?
In the JGB market in October, amongst Japanese investors, the big net buyers of JGBs were Citibanks by 2.6 trillion yen, followed by pension funds trust banks by 877 billion yen and lifers by 726 billion yen. In October, Japanese investors supported the JGBs. Japanese investors unloaded foreign bonds at a faster pace following the volatility in global bond markets touched off in the UK in September. Securities flow data for September and October reflected the sizable unloading foreign bond flows, but there are also reversals and buying JGBs. More recently, we have been receiving questions about preference for U.S. Treasuries amongst Japanese from foreign investors. I have been responding that Japanese investors need to invest in U.S. dollar bonds, and they could start buying more, depending on, firstly, dollar-yen basis costs, and secondly, the need for dollar asset liquidity. Japanese banks have returned to dollar bonds primarily because of their need for dollar collaterals. This is due to Japanese companies' overseas business portfolios.
Got it. So yeah, so sounds like, Japanese investors getting back involved in the JGB market. They continue to sell foreign bonds during the month of October. And I would note, that they've also continued to sell foreign bonds, in the weeks that so far in November. But I would say even like flows through our franchise, have definitely become much more mixed with a couple notable buys. So, would add that to your point about, about Japanese investors needing to buy U.S. bonds. But that's a pretty comprehensive discussion of what Japanese investors have been doing, both in JGBs and foreign bond markets. But what about foreign investors? What were they doing in the JGB market during the month of October?
Okay. JSDA data for October shows that overseas investors continue to unload long-term bonds by a net 1.8 trillion yen, but they turned net buyers of medium-term JGBs by 182 billion yen, and their pace of buying accelerated for super long JGBs by 439 billion yen, and TDBs by 25 trillion yen. Overseas investors continue to avoid 10-year JGB risk in October as they rebuild their JGB portfolios. Also, MUFG data released on November 9th shows that overseas investors unloaded a net 1.1 trillion yen of Japanese securities in October, a slower pace than September. This included net unloading of medium to long-term yen bonds by 1.7 trillion yen and short-term yen bonds by 1.4 trillion yen as they turned net buyers of Japan stocks and investment fund holdings by 2 trillion yen. Foreigners, firstly, continue to avoid 10-year JGB risk. Secondly, diversify their JGB durations. And third, rebuild their Japan stock holdings. Foreigners cut their JGB holdings dramatically in September, but in October, diversified their JGB positions while limiting 10-year JGB yield risk.
And I think that makes a lot of sense with the sell-off and steepening, generally speaking, in the super long part of the curve and the, somewhere where you really don't need to fight the BOJ at least as hard. There's a lot more value out there. So, okay, great. Well, let's do this. Don't want to close things out without getting your outlook across various markets, specifically yen rate, spot dollar yen, and yen basis. So tell us.
Dollar yen returned to 142 range last week after the return of lockdowns in major Chinese cities propelled the dollar higher and hurt Asian currencies and renminbi. Dollar selling has picked up as dollar rates have declined and dollar yen moved back to the 139 level. All eyes will be on the US ISM manufacturing and jobs data this week, softening US economic sentiment and changing the supply demand in the labor market are likely to affect the pace of US rate hikes to come, which would impact dollar yen. Over the near term, we see the dollar yen taking a bearish bias from a returned a neutral one, with trading between 137.50 to 140.50. The yen swap rate curve has risen. The Ministry of Finance will hold auctions of 2 years, November 29th, and 10 years, December 1st, putting stress on a JGB yield curve overall. The BOJ will release its JGB buying plans for December at 5 p.m. Tokyo time on November 29th. JGB yield curve volatility could pick up depending on the dates of BOJ's JGB buying operations and scale of buying. But the BOJ will likely continue to use daily and temporary ad hoc JGB buying operations as tools to continue to manipulate JGB rates we see a neutral bias for yen rates. The front end of the JPY basis curve has tightened while the long end has widened slightly. Weekly data from the Ministry of Finance shows that Japanese investors continue to unload falling securities in the week of November 13th to 19th by a net 419 billion yen. This included net unloading of medium to long-term falling bonds by 526 billion yen versus net buying of falling stocks and investment fund holdings by 46 billion yen and short-term falling bonds by 60 billion yen. Japanese investors have unloaded medium to long-term falling bonds for 4 straight weeks, while net buying falling stocks and short-term falling bonds as they have shifted from reviewing their asset portfolios to starting to reshuffle their holdings. Over the same week, foreigners bought a whopping 5.7 trillion yen of Japanese securities in the net terms. This included 3.5 trillion yen of short-term yen bonds, 2.2 trillion yen of medium to long-term yen bonds, and 4.5 billion yen of Japan stocks and investment fund holdings, all net terms. Appetite for JGBs among foreign investors has not failed to surprise. Over the near term, ahead of the year-end holidays, we expect foreigners to limit their G10 yield risk and keep buying more JGBs in an unusual pattern. On the other hand, we expect Japanese investors to continue diversifying their asset portfolios while reviewing their foreign bond holdings. We now see a tightening bias for yen basis rather than neutral.
Well, that's very interesting. So obviously Japanese investors selling foreign bonds and foreign investors buying Japanese bonds is a great recipe for a much tighter basis. We've obviously seen that. The basis is looking at 3 months, it's tightened from, let's say down 70 to down, 40 something over the course of the month. I'd also highlight that the usage at the Fed's reverse repo facility has come down, come down a pretty decent amount during the same period. So certainly a lot of different things to watch for there. But yeah, to summarize, spot dollar yen, you're bearish, neutral on JGBs as you can't fight the BOJ, although perhaps that changes in the first or second quarter of next year, and tighter on the basis. So all great stuff. Thanks for coming on this podcast episode with us, Sekido-san.
Thanks for having me, John.
And thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts. And reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.